So really, it's a prove me moment, Neil, for the world's biggest tech companies, since the Mag 7 have accounted for nearly 60% of the stock market gains that we've seen over the past year. And now they account for an astonishing 1/3 of the S&P 500. So 7 names make up 1/3 of the S&P: Apple, Microsoft, Nvidia, Amazon, Google, Meta, and Tesla. And so that means that for every $10 invested in any index fund, and I know you have a lot of them, $3 plus goes into these 7 names. I mean, that's incredible. Almost $1 trillion, though, in combined losses for these 7 stocks during Monday's sell-off. And Nvidia itself has lost $1 trillion in value in the past month alone. And that's because, look, there's been a rethink after the huge rally from the AI hyperscale. The so-called hyperscalers now need to prove that they are worth their expensive valuations. And so far, 6 out of the 7 that have reported earnings so far have shown that earnings growth is expected to slow, expected to only grow 17% this quarter after growing 30% in the springtime, 50% growth in the first quarters to start this year. Now, couple that slowing growth with a huge spend on AI, and investors are getting a little nervous at this math. Virtually every Mag 7 stock that has reported so far, and I've spoken to a few of their top executives, they have said that they're going to spend a lot more building out AI in the next year, and most of that money going to buy Nvidia chips, of course. But Nvidia says that its next generation AI chip Blackwell has hit a production snag and might be late to the market by a few weeks to a few months. Apple, Google underperforming. I mean, 2 of the underperformers from that Mag 7 group. And this is after the antitrust ruling that alleges that Google runs a search monopoly. But the reason why Apple is down is because that threatens a $20 billion annual payment that Apple gets each year from Google to be the default search engine on the iPhone. Now, these losses means that a few billion less in the pocket of the world's richest. But Neil, I'm sure you know this from firsthand knowledge. When you're worth $100 billion, you're not going to miss 1 or 2 billion, right?
I don't know. It's like couch cushion money to these guys.
Right.
You know, I was thinking of you, though, Susan, when you had, and we're talking to the Alphabet guys, I think a few weeks ago.
Yep.
Did this court case come up at all, or where this could go? I mean, they were pretty optimistic. You know, it was a report that kind of beat estimates, but maybe it was an early signal that that wasn't enough. But what did they tell you back then?
Yeah, so I spoke to Alphabet's president, Ruth Porat, and I've asked her over and over again about regulation and how that might bite into the bottom line. And what they've told me, and in relation to this 5-month antitrust trial that finally got a verdict from the U.S. district judge, they've told me, look, I mean, this is going to play out over the long term. Think about it. They could, of course, appeal this ruling, which might take another 5 years, and then they could possibly, if there's a fine involved, of course, pay that. But there could be some small changes that they could also offer either the DOJ or the district judge. So they tell me this is a long-term play for them. They're focusing on building out AI technology, and they're still spending a ton of cash, Neil, regardless of the regulation and the oversight, $60 billion possibly this year on AI.
Incredible. All right, Susan, thank you for that. Susan Lee will be updating you on how things are going for technology in a little bit.